Good morning and welcome to the Coinbase Institutional Markets Show. It is 23rd of July. My name is Ben Floyd. I'm Head of Execution Services here at Coinbase, and I will be your host for today. We've got a fantastic lineup running you through all of the most important topics within crypto. This week, we have the launch of the ETH ETF. We have had a number of large changes within the political climate. We have a number of specific crypto catalysts that we've been talking about for many, many weeks now, but it's worth keeping them front of mind because they are important to the space. We're also going to touch on real world assets and also get an update on what's going on chain. Before we do that, while we were looking through the news in preparation for the show, we noticed another new documentary. Greg, it was yet another negative one. It was on SBF. It's a Bloomberg original. And the name is Ruin, Money, Ego, and Deception at FTX. 107 minutes. Have you watched that yet? Have you watched many of the crypto documentaries?
I haven't watched that one yet. I have seen a number of crypto documentaries. They all tend to have a similar slant, which is probably along the lines of this one, which I don't think reflects our industry as it should, but nevertheless, they're entertaining. So I will take a look.
Yeah. It's certainly a title like Ruin. It allows people to click, and I imagine it. It's a little more attractive than like a boring story of a company like Coinbase just doing the right thing for a long time. That's not quite exactly. As exciting, sadly. Another one to watch in our downtime. But before we get into it, for those watching on YouTube, don't forget to scan the QR code to access David and David's fantastic research. And if you are listening on podcast, those links will be in the show notes. In addition to that, please don't forget to like and subscribe. That's how others learn about the show. But without further ado, let's get into it. So happy ETH ETF Day, another momentous occasion for the industry. Greg, you've been close to obviously the BTC ETF, and we've been talking about what we can expect from a flow perspective for quite some time, whether or not it was going to be a bumper day, kind of beating Bitcoin, or whether or not it was going to slightly disappoint. Now, we've had a good move up in price recently, and we have a little more length in the futures market. So people are feeling a little bit more buoyant, but as around about 11 o'clock Eastern, when we've had some of the volume start to trade, how is the ETH ETF looking at the moment?
Well, yeah, you're absolutely right. We really didn't know what to expect coming into today. Estimates were kind of all over the place, but just a few hours into the trading day, we had about $350 million worth of the newly launched ETH ETFs trade. That puts us on track for about a $1.2 billion day, I'd estimate, which is about a quarter of what we saw during the Bitcoin launch. And I think this is a great start. It puts us kind of at the higher end of a lot of the expectations that we saw and that were among our client base. So yeah, I'd say just a couple hours into today, things are looking pretty good.
Perfect. And DD, we'd love to bring you in here. How are we looking across the different issuers? There were 9 in total. How are they thinking about this from a pricing perspective, given they've got a little bit more color and context after listing the BTC ETFs?
Yeah, very similar to what we saw with the Bitcoin ETFs. You see that a lot of the issuers themselves are waiving the fees, at least for initial periods of 6 months to a year, or up to a certain limit amount. I think one of the more striking differences that we've seen with the ETH ETFs compared to the Bitcoin ETFs is that, of course, Grayscale introduced the Ethereum mini trust. And initially, they were actually going to lower their fee for about 12 months to around 0.12%, which would have been in line with what BlackRock's doing. But in fact, they've actually reduced that to 0. So they're going to just do that for the first 6 months. But I think that's one way that they're trying to encourage some of the outflows that might be coming out of the ETHE Grayscale Ethereum Trust into other funds.
Perfect. And David, we did see a movement in ETH in the last couple of days, kind of a 10% move down. Is it fair to say that that was because of this movement from ETH into the mini, which they've also said is cheaper than a Big Mac, which I'm sure will play incredibly well with retail?
Yeah, so like the mini trust itself was funded with 10% of the ETHE fund. So I think that there were some people who didn't understand that was taking place, but it's going to be a one-to-one swap for holders of the ETHE trust. They're going to receive equivalent shares of the mini trust itself. So I think that that's one way that Grayscale believes they can start encouraging people to actually who want to exit their ETHE position to actually go into something that might be a little cheaper.
Yeah, that makes a ton of sense. It's an aggressive move, but it makes a ton of sense for them to do that. Just looking at this table that you've got for us here, David, especially for those who are not viewing on YouTube. So we've got a 0% starting fee for the Grayscale Mini Trust, Franklin, Van Eck, Bitwise, 21 shares, Fidelity, and then you've got 12 bips for iShares, Invesco at 25 bips, and obviously the original ETH is still at 2.5%. So there's some really, really aggressive fee structures there, and I'm interested to see how the new assets spread across those. David, I'm curious, like, what are some of the other things that you've seen from issuers that are different or interesting versus the Bitcoin ETFs?
Yeah, I would say that the expectations here are, as kind of Greg said, that you're not going to get the same amount, the equivalent amount that you saw with Bitcoin flows. It's clearly going to be a fraction of that. But I think part of the idea behind that is that this is, of course, a pretty tough act to follow because I think there was just so much expectation surrounding like the Bitcoin spot ETFs. But I do think that because positioning and because expectations have kind of started from such a low point, the opportunity for ETH to kind of surprise to the upside, I think, is much stronger than what we saw with the Bitcoin spot ETFs.
Yeah, and I will just a bit of a shout out for the team here at Coinbase. 9 ETH ETFs, and we are custodian on 8. So well done to the team for working hard there. We've also seen Bitwise disclose their addresses again, so they can see exactly where the holdings are. I quite like that as I guess a more crypto native way of showing where the assets are. So yeah, so we'll keep in touch with that. We're gonna have more trading over the next few days, I'm sure. And I'm sure we'll see a lot of those flows moving from ETHE into some of the other products, as we did see with GBTC as well. But I'm sure from Grayscale's perspective, hopefully a larger amount will go into the mini this time around. Now, moving to Bitcoin flows, we actually had a bumper day yesterday with 526 million from IBIT alone. Greg, we'd love to bring you in here. What are we seeing with regards to, I guess, flows more broadly in relation to the ETFs, and what do you make of the strong inflows we saw not only the back end of last week, but early this week as well?
Yeah, so the Bitcoin ETFs continue to surprise, I think, all of us with the strong inflows that they're garnering. On the spot side, we're seeing healthy flows. They're unique or remarkable in that, they're really still predominantly in Bitcoin and the altcoins. We didn't see a lot of pre-positioning in ETH like we did in Bitcoin before its launch. So, to David's point earlier, I think positioning now, especially in ETH, but in Bitcoin as well, is much closer to neutral, which could allow us to rally quite a bit from here, if price action holds up. This morning, right around the launch, around 9:30 a.m. Eastern time, when these new products started trading, we saw quite a bit of volatility in the spot market. ETH traded in a quick $100 range. I expect we're going to continue to see that volatility. But if we are able to break to the upside, positioning looks much healthier and could allow this to run quite a bit.
And David Hahn, we'd love to bring you in here, just as we kind of like hop back to ETH. As Greg mentioned, we've had some pretty big moves on day one as expected, but the narrative kind of going into this has been on the more negative side because there's been less activity on ETH. A lot of that has gone to L2s. How are you thinking about that more broadly at the moment?
Yeah, definitely. I know ETH's investment narrative has shifted a lot with the adoption of L2s. A lot of traditional metrics that we've looked at last cycle, like the narrative of ultrasound money, how ETH was a deflationary asset because of all the burns that were happening from L1 transactions, is no longer really applicable. Today, the Ethereum inflation rate, or at least over the past week, has been around 0.5%, which is much smaller than everyone else. You're still getting real staking yields of around 3 to 3.5%, depending on whether you're a home staker or a solo staker relative to the inflation rate. So still very promising. And a lot of the activity has moved to L2s, as you mentioned. So the way I'm thinking about this in large part is that it feels like the market doesn't really understand the value of L2s, whether that's extractive. There's a lot of debate around whether L2s are purely extractive because they charge more in transaction fees and they will actually pay to the L1 in rent. There are some who say it's additive because you onboard more people with using ETH as the native asset. And I think that's still an area of very hot contention, both within the crypto natives and just more broadly about the role of ETH in all these burgeoning L2 ecosystems.
Yeah, I agree. Still figuring out that path. I mean, it is still still very early in the life of Ethereum and the space more generally. So not unexpected that it's going to have to figure a few things out. Now, switching gears a little bit, it's obviously been a very, very eventful week with regards to the political situation in the US, and that does mean a lot to our industry. So DD, we'd love to bring you in here and just kind of have a bit of a summary of what's gone on in the last 7 days. If you can do that in less than an hour, because I appreciate there has been a ton going on, but it does mean a lot to our space. So yeah, give us a quick summary of the political climate and what that means to crypto.
Yeah, that's a good question, Ben. I would say that probably the last 7 days, the biggest change we've seen, of course, is that there's a new nominee for the Democratic Party for the president. And I think that a lot of people are now trying to parse what would a Kamala Harris administration look like in terms of policies for crypto and how that would differ from President Biden, for example. The truth is we really don't know. I think that we don't have a lot of information to go on. We have seen that in recent days, or at least over the last month or so, members of the Biden administration, like Anita Dunn, for example, a senior advisor to President Biden, actually was out in California speaking to crypto leaders at a roundtable organized by Ro Khanna, a Democratic representative in California. She was accompanied by Christian Gildebrand from New York, for example, also a Democrat. So I think that a lot of people are kind of paying attention to what's happening on the Republican side, especially since it's been so prominent with Donald Trump speaking at the Bitcoin 2024 conference in Nashville, and also making a vice presidential choice in JD Vance, who is also has been known to own Bitcoin as well as support crypto-related bills. So I think that we are seeing on both sides of the aisle that there are efforts to actually cater to the crypto as an issue in this election.
Yeah, 100%. And interestingly, looking at Polymarket, the odds have changed pretty dramatically from last week, where Trump was around about 70% or higher to win versus Biden, the remainder, give or take. And then now that's come down to 64% with Kamala Harris at 33%. So now, to be clear, betting markets are not always right, but it's an interesting thing to keep an eye on. I think for the industry as well, one headline I saw recently, which I thought was interesting, was that the pro-crypto group Fairshake is the largest super PAC of this election cycle with over $200 million. Now, that is just a lot of money, and it really, I guess, speaks to how important the political climate is to our industry, that people are backing that super PAC quite as much as we are. And full disclosure, Coinbase has also contributed to that super PAC. Now, David, I want to come back to Bitcoin 2024. You mentioned Trump is speaking on the 27th, which is Saturday. What are some of the things that we could expect to hear from him? And is it just him, or are we going to get the double act there?
Yeah, I think that, there's a lot of rumblings about what Trump could actually say at the Bitcoin 2024 conference, a big topic that a lot of people are expecting. And this isn't just crypto Twitter whispering about it. I think there are a lot of crypto representatives, prominent ones, that have kind of put more credence into this idea. But Trump could actually talk about a Bitcoin strategic reserve. Right now, the U.S. government, for example, holds around $14-15 billion worth of Bitcoin. It was seized from Silk Road and other sources, for example. There is the idea that he could actually convert that into holdings for the U.S. government itself as a reserve. So I think that is something that, if he does announce it, could be pretty outstanding for Bitcoin in terms of a important market catalyst that a lot of people are looking at. But yeah, I think that there's also like a lot of important representatives that are also going to be at the Bitcoin conference, like Cynthia Lummis, for example, a couple other representatives who are going to be speaking at this conference.
Thanks, David. So while it feels incredibly unlikely that Trump will do anything like that, let's kind of just go through the process of, if the US was to do that, what would some of those, what would it look like if we compared it to gold? So Greg, we'd love to bring you in here. We were talking earlier about how much gold the US holds. If the US was to do the equivalent with Bitcoin, what would that look like?
Yeah, it's a good question. And I agree. I think it's low probability that this actually happens. The probability that he says something about this is impossible for me to handicap. But if this were to happen, what would it look like? Well, the US government holds, call it about, just to make the numbers easy, $600 billion in gold reserves. So if they were to transfer the $15 billion of Bitcoin to the treasury and hold that in reserve as well, they'd have, Bitcoin would be about 2% of their, real asset or gold in Bitcoin reserves, which, kind of puts it in line with where a lot of, financial advisors that are open to Bitcoin suggest people should have their allocation pegged. So, it's interesting kind of math to work through. Whether or not it happens is obviously anybody's guess, but maybe Trump's. However, if anything like this is mentioned at Bitcoin Nashville, it'll certainly, send the token price considerably higher.
Yeah, it was interesting. Last Friday, that was, I guess, when the story started to surface a little bit, and the market was moving higher. And speaking to a number of market participants, no one really knew what was going on. It was the same day as CrowdStrike, so there was some thoughts around whether or not people were buying into decentralization again, and the value of that, especially from a tech stack perspective, when one or two companies can affect so many companies globally. And then this story started to proliferate a little bit. So we'll see. Is it a story for a move, or is there something more behind it? But I guess on Saturday, a few of us will be glued to our screens for the real time video from a Bitcoin 2024.
Yeah, but, I don't think you can overstate how important politics is for our market right now. In almost all of our client conversations with institutional investors, it's the number one topic that comes up. It's really the strongest tailwind that the market has right now. Macro and where rates are going to be has really taken a back seat to, what the future administration, what it may be and how it would treat crypto.
Yeah, 100%. And just to reiterate here, Coinbase is not a political company, and we're not taking a view here. We're simply talking through what the market is responding to at the moment, and it is overwhelmingly related to the political climate. I guess what's also interesting, when you zoom out, 6 months ago or 3 months ago, we were talking about how bad it was. And in this short period of time, suddenly it's gone from a significant headwind to a significant tailwind. But I guess 2024 continues to surprise. Maybe is one way of summarizing that.
Yeah, and it's amazing because we've been getting headlines that maybe aren't directly election related that haven't really gotten as much attention. Like Hester Peirce, for example, was on the tape saying that the idea of staking could actually come to ETH ETFs at some point in the future, for example. But no one's talking about it because we're also focused on the bigger picture, which is that the regulatory environment itself in the US could change. And in a lot of ways, that's kind of just catching up to what we're seeing in the rest of the world. Like we've seen MiCA, for example, in Europe actually taking effect on stablecoins starting at the end of June. That Hong Kong, for example, is coming up with their own framework for stablecoins. And yes, we've had some bills in the US, but we haven't necessarily seen the progress we would have liked to. I mean, we did see Fit 21, which was amazing to see because there's a lot of bipartisan support for that.
Yeah, and I guess what's been interesting on the trading desk as well, we've actually started to see more flow in some of those assets that have perhaps a slight cloud over them from a legal or regulatory perspective as well. So it does feel like as it's softening and the climate is improving, people are responding to that with their trading actions as well and trading decisions. So switching gears slightly, want to run through Mt. Gox and FTX. Obviously, these things we've spoken about many times over, but they are important. I just want to keep them front of mind for all of our viewers and listeners. So Didi, can you maybe start with a quick update on where we are with Mt. Gox?
Yeah, so since Mt. Gox actually, or the Rehabilitation Trust actually initiated the repayments starting on July 5th, we've seen that there's been around 50,000 Bitcoin that has gone to exchanges. We don't have transparency on when those exchanges themselves pay the actual creditors, but we can see their wallet movements, and we know that there's now around like 90,000 Bitcoin left based on Arkham intelligence data, for example. So, like I would say that overall, our view hasn't necessarily changed. We still think that, for the creditors who are receiving the Bitcoin, the likelihood that they're going to be just dumping on the market indiscriminately, I think is still fairly low. I think this isn't like we've seen like the supply overhang that we've seen in recent weeks. I think these creditors are going to be much more price sensitive. They're going to be kind of paying attention to the market. And as a result, I would think that any selling that does occur is going to be very gradual and orderly.
Got it. Thanks, David. Now, moving on to FTX claims, Greg, would love to bring you in here. There was a headline in Bloomberg and various other sites about a hedge fund named Diameter who were buying FTX claims in the single digits and have a massive position over $400 million. It feels like one of the trades of the year, if not the decade so far. So, Greg, where are we with those at the moment?
Yeah, that hedge fund was very proud of that trade, as they should be. That's a career-making trade. But yeah, where we are is claim holders should get about 118 to 120% back. Now, some of those claims and some of that fiat payment will go to distressed hedge funds that bought them. And that money likely won't be recycled back into the market just because they take a more traditional view towards their strategies. However, a large portion of the claims, estimates are around half of the total payments are likely to go to individual creditors. These are folks that traded crypto before, know the market, have been very vocal about how upset they are that the market has rallied as much as it has, while they've sat in bankruptcy. So the thought is that, that portion could likely be recycled back into the market and give our market a boost. So now we're trying to figure out, when are these claims going to be paid out? And we don't have a hard date yet, but expectations are, sometime in Q4. So we'll have to keep a close eye on that.
Yeah, certainly the trade, a career-making trade for sure. I bet they wish they'd bought a few more now as well. But yeah, another positive catalyst hopefully to come. And I guess actually just while we're talking about distributions, obviously Mt. Gox, we're expecting that to be a distribution in kind, so people can have an opportunity to sell that themselves. But again, it's a decision made person by person as opposed to broadly across a large group, unlike the FTX portfolio, which was sold down by a centralized dealing entity. So moving on to an update on real world assets. Now, this kind of got me a little bit excited when I read it. So David Hahn, can you just give us a quick overview of what is happening with Hamilton Lane and some of the other funds that are moving on chain?
Yeah, definitely. One of the big trends we've seen this year is actually tokenization of real world assets on public networks. There's been a lot of noise over the last 2 or 3 years about various banks and institutions making their own private permission blockchains, but that's not very accessible to people who are not institutional investors and not investing in those very siloed products. One of the headlines from this morning actually is that Hamilton Lane, an asset manager with almost $1 trillion under management, is launching a private credit fund on Solana. And one of the big benefits that they're doing here is that the minimum investment amount would be $10,000 instead of the normal $250,000 threshold, which would allow people to invest in smaller clips and just make it more accessible to people internationally. I think one thing that's really interesting here is actually the choice of creating this tokenization project on Solana as opposed to, say, Ethereum or some other EVM compatible system, which suggests institutions are actually looking beyond just the EVM for tokenization projects. Even if most of the big ones like Buildle and some of the other tokenization funds are currently on Ethereum, there is a possibility of migration beyond the EVM.
Yeah, super cool to see. I also just love hearing about all the things that are being tokenized, whether it's watches or whiskey or property or real estate funds or private equity funds, all that sort of stuff. And for me, it really talks to what you can do with blockchain technology. And the minimum, I think, for that Hamilton Lane fund previously was $2 million. Whereas to your point, to make it $10,000 suddenly means that someone with a much smaller amount of money can add private credit to their portfolio, which I think is just super, super exciting. And David, just following on the questionnaire around them moving to Solana versus EVM, which arguably, or many people would say, is more secure. Do you think we're going to see a trend of moving to Solana because it's cheaper, or for some of these large transactions, can you have them on? Do you need them on Ethereum because of the security?
Yeah. So my thought process is actually most of them will be on Ethereum. I think that the network effects of blockchain are one of the reasons why you want to tokenize things on a network where other things are tokenized. So you don't have to worry about onboarding, for example, stable coins. You don't need to worry about onboarding users. You have this network of, say, if there's one type of asset on this network already, you might want to throw in another type of asset. Why not be the third type of asset on that chain versus going to another chain and then not having as much liquidity? I think we've kind of seen that a little bit with, say, for example, Stellar, which hasn't really had very much smart contract adoption, but has had a lot of tokenized funds on there. Lee Franklin Templeton has a fund on there, but it's a lot harder to get users onboarded onto that network when they're not already onboarded to that network. So I think one thing that was interesting and that really stood out to me about Solana is that Solana really feels like it's the main competitor to Ethereum and the EVM. I think that the engineering resources required to tokenize something on Solana is quite different from that required to tokenize something on the EVM. So I would assume that they've done sufficient background checks. They figured out the entire different pipeline for the issuers to tokenize these assets on the SVM, and how that might be different from Ethereum. And it's interesting to see that they've weighed these costs and benefits, and they've decided to go with Solana over Ethereum.
Yeah, very, very much so. David, sticking with Solana, I know there's been some changes in DEX volumes. So can you run us through Solana versus ETH from a DEX volume perspective?
Yeah, I mean, this is one of the other trends that we've been seeing with Solana's cheaper fees. The DEX volume, or the monthly DEX volume for Solana in July so far, so the first 23 days of July, has been just shy of 41 billion compared to Ethereum, which is at 36 billion. And I believe this is the first time on the monthly where Solana DEX volumes actually surpassed that of ETH. Note, this is not the first time that some other chain has surpassed ETH in DEX volumes. Last cycle, Binance Smart Chain surpassed ETH, but it clearly was not as sticky, not as sustainable in the long term. So I think it's still a little bit early to claim victory for Solana, but I don't think that's something we can ignore very easily, just given that it really does feel like a 0-to-1 competitor. All the volumes here, all the apps built on Solana need to be built from scratch, whereas in the previous cycle, a lot of these alternative chains were all EVM compatible, so there was a lot of copy and pasting of protocols going on, whereas that's not the case from Ethereum to Solana. You have a totally different wallet system, a totally different liquidity system. So I think that this is a bit more meaningful. That said, some of these volumes might also be distorted because people are farming for Jupiter's airdrop token. They have another round coming up. It's not sure what the data is going to be, but points are probably already being calculated in the background. And I think people are moving ahead of this.
Interesting. And sticking in the Solana ecosystem, what is going on in the meme space in general?
Yeah. And I think the meme space in Solana has been something that I feel like a lot of institutional investors have kind of looked down a lot on. They've been thinking, or one sentiment I've heard reflected pretty regularly is that, memes are not very sustainable. It's not something that can drive revenues or long-term adoption. But if you pull up the chart from Pump.fun, which is a meme coin launcher, which we've talked about a few months ago, actually, I think back in April, during the height of the meme coin mania, we saw that they were making around $2 to $3 million per week in revenue. And what's been most surprising about the revenues on Pump.fun is that it seems that it's only been growing. Even as we had that previous drawback over May and June, in on-chain activity, pump.fun revenues actually went up to, they've been just continuously growing. The quick drawback, if you see on screen, there was a brief drawdown in the end of May where there was a small hack of one of the pools. So they turned off the protocol for 2 days. But since then, the weekly revenues on pump.fun have ranged between $4 and $7 million. For comparison, MakerDAO, which is one of the huge giants of DeFi, they've been here since 2017. They're actually pulling in a weekly fees of around $4 to $5 million. And you see a big bump up in March as they increase the DAI stability rate, so people are paying more to borrow, but that's going to have tapered down to $4 to $5 million. And so what's been interesting is that not only has meme coin driven activity been higher and stickier than anticipated, it also puts it in line with some of the highest generating revenue protocols in traditional DeFi space, such as Maker. And I think that this sort of activity maybe actually has given some tailwinds to Solana, which we've seen kind of bump up 14% on the weekly compared to 2% for Ethereum and 5% for Bitcoin.
And David, just for those that have forgotten what pump.fun is, can you give us a quick overview of what the platform does?
Certainly. Meme coins are one of the biggest, sectors, currently one of the most visible sectors in crypto, with Dogecoin to Shiba Inu. What pump.fun does, it's a protocol on Solana that allows anyone to launch a meme coin without any technical skill. You just need to upload an image, add some links to your Twitter or whatever, and you can launch a token. And people can have discussion forums on the tokens that are launched there, and it takes a little bit of the fees for all the tokens that are launched. So pump.fun, I would say, is the revenues that they're generating is a reflection of the profitability of meme coin trading and the kind of attention that's being put into that space. So the way I would read this is meme coin activity on Solana is a lot stickier and a lot more profitable than most people give it credit for.
Perfect. Thank you, David. All right, I'm going to go off and make myself a fun new coin. It could be the England loses in every single soccer final ever coin. Anyway, thank you so much, David. Thank you, David. Thank you, Greg. We'll be back next week to give you an update on all of the ETH flows as well as BTC flows, and also on what former President Trump says at Bitcoin Nashville 2024. Thank you all for listening. Take care. Have a great week.